Today, we're going to discuss the costing methods that are being used in manufacturing a product. And these are absorption and variable costing. Again, this is your course facilitator, Sir Albert. The main difference between these two costing methods lies on the components of product cost, which are sometimes called manufacturing cost or inventory cost. The components are direct materials, direct labor, variable overhead, and fixed overhead cost. Under absorption costing, all these costs, direct materials, direct labor, variable, and fixed overhead cost, are treated as product costs. This is why it is also known as the full costing method. But under variable costing method, only variable costs such as direct materials, direct labor, and variable overhead are treated as product costs. Fixed overhead costs are treated as period cost or expense. These are treated as such because this will still be incurred regardless whether there has been an operation or none for a given period. Example of fixed overhead cost is factory rent. The company should still pay and incur this cost even if no operation has occurred during a given period. The following slide details the other differences between these two costing methods. So the rationale. Under absorption costing method, all manufacturing costs, whether variable or fixed, are necessary ingredients for production to take place and should not be ignored in determining product cost. And then under variable costing, fixed factory overhead costs are incurred in order to have the capacity to produce units in a given period. These costs are incurred whether the capacity is used to make an output. So these costs have no future service potential and should be charged against the period and not included in the product cost. And this is the same in our previous slide. Next, acceptability. Absorption costing method is consistent with accounting standards. This method is acceptable for financial reporting and tax purposes. Variable costing method violates the matching principle, the accounting principle that calls for the recognition of expense by matching it with the related revenue in the same accounting period. And thus, this is not acceptable for financial reporting and tax purposes. It is only used for internal purposes only. As to the inventory, since fixed factory overhead is considered as a product cost, the peso amount of inventory under absorption costing is always greater than that of variable costing. Because under absorption costing, we have 4 components, and then under variable costing, there are only 3 components as discussed in our previous slide. As to the income statement, absorption costing distinguishes between product and period cost. Product costs are reported in the income statement when the related inventories have been sold. Otherwise, it will be presented in the balance sheet as inventories. Period costs are expensed as incurred. It is presented using the traditional income statement format, which we are going to show later. As to variable costing, it distinguishes between variable and fixed cost. All variable costs are first deducted from revenue to arrive at the contribution margin, and then fixed costs are deducted to obtain profit. All fixed costs, regardless whether it is manufacturing or selling and administrative, are expensed as incurred. It is presented using the contribution margin approach. So this is how we present the income statement under the two costing methods. Absorption costing presents the traditional income statement which you may have probably learned in financial accounting. So as you can see, cost of goods sold is the product cost, and then the expenses are your period cost. While variable costing presents it using the contribution margin approach. So it distinguishes between variable cost and fixed cost. Aside from the manner the income is presented, the amount of income itself may differ between the two costing methods. Variable costing income may differ from absorption costing income because of the difference in the amount of fixed factory overhead recognized as expense during an accounting period. This is caused by the difference between production and sales volume, which will be illustrated later on. Okay, so for our first problem, at the end of Acosta Corporation's first year of operations, it was able to produce a total of 10,000 gallons of chemical X, a highly poisonous liquid. Out of this production, only 8,000 gallons were sold. The ingredients to produce each gallon of chemical X cost 2.5 per gallon. Direct labor per gallon cost 150 cents. Manufacturing overhead per unit, variable and fixed, are 50 cents and 2 pesos per gallon, respectively. Variable selling expense per unit is at 40 cents, while fixed expenses total 6,000 for the year ended. Sales price per gallon is 10 pesos. Okay, so for our first problem, our production total 10,000. Okay, and our units sold totaled 8,000. Definitely, your production is greater than sales. Okay, and then let's solve first net income under absorption costing. So absorption costing is is presented using the traditional format. Okay, so you have learned this in your financial accounting. Okay, so we have sales less cost of goods sold, and then you have the gross profit less selling and administrative expenses. Okay, then you have your net income or operating income. Okay, so how do we compute for sales? This is very easy. So you have to multiply this by the you have to multiply the selling price per gallon by the number of units sold. Okay, so that is 10 times 8,000. Okay, so that gives us 80,000 pesos. Now, cost of goods sold. How do we compute for cost of goods sold? Okay, so the components of the cost of goods sold are, what are the components? These are your product cost. So under absorption costing, as we have previously discussed, all 4 components will form part of the product cost. Okay, so what are these 4 components? So we have the direct material, so that's 2.5 per gallon, direct labor 1.5 per gallon, and then variable and fixed overhead costs 50 cents and 2 pesos respectively. So all in all, the total would be 2.5 plus 1.5 plus 50 cents plus 2. Right, so that gives us 6.5. Multiply again by the number of units sold, which is 8,000 units. Okay, so 6.5 times 8,000, that will give us 52,000 pesos. Okay, so that is your cost of goods sold. Then deduct this from 80,000 to get the gross profit, which is 28,000 pesos. Okay, now for the selling and administrative expenses, okay, so we have 2 types of cost. We have variable and fixed cost. Variable selling expense and fixed selling expense. Okay, so for variable selling expense, okay, according to the problem, the variable selling expense per unit amounted to 40 cents, while the total fixed expense amounted to 6,000. Okay, so since per unit ang given sa variable cost, so we have to multiply this first. Okay, sorry. Okay, so we have 40 cents times number of units sold again. So 80. Okay, so 8,000. So that's 40 cents times 8,000. Okay, that gives us 3,200. Then, for the fixed expenses, okay, total ang given, that's why just have to copy 6,000. Okay, so your net income under absorption costing amounted to, so let's see, 28,000 less 32 less 6,000. Okay, so we have 18,800. Okay, so this is your operating income or net income under absorption costing. Now, under variable costing, okay, so we have to make use of the contribution income statement. Okay, so contribution income statement will be presented as follows. So still, the starting point would be sales. Sales less variable cost. Okay, and then gross profit less fixed cost. This is, it should not be gross profit, but rather, contribution margin. And then less fixed cost, you will have net income. Okay, so for the sales, it will be the same for variable costing. So it will be 80,000. And then for the variable cost is composed of two again. So we have the manufacturing cost or the product cost, variable product cost, and variable selling administrative expense or variable period cost. Okay? So for variable manufacturing cost, again, so what are your variable manufacturing costs? So your variable manufacturing cost will be, okay, direct materials again, direct labor, and variable overhead only. So that will give us 2.5 plus 1.5 plus 50 cents. Okay, mental. Okay, that gives us 4.5. Okay, and your variable period cost or variable selling admin expense is what? 40 cents. Okay, so 40 cents, 0.40. Okay. So that gives us a total of 4.9. We multiply this again by the number of units sold. That gives us 8,000. Okay, so 4.9 times 8,000. Let's see. 4.9 times 8,000. So that gives us 39,200. So this is your total variable cost incurred for the year. Okay, so how much is the contribution margin? Contribution margin, so variable cost deduct it from sales. So that gives you 40,800. Okay, so this is called contribution margin because this amount is the contribution of the sales, no, less of course the variable cost, to the recovery of our fixed cost. Now, how much would be our fixed cost? Fixed cost are composed of two also. So we have fixed manufacturing cost and fixed selling and admin expense. For fixed manufacturing cost, the only manufacturing cost, no, aside from the variable cost, is your fixed overhead cost. Okay? So fixed overhead cost na lang meron. Okay, so how much is your fixed overhead cost? We have 2 pesos per unit. Okay. So 2 pesos per unit siya, we have to determine the total. So that is 2 pesos multiplied by, is it number of units sold or the number of units produced? Okay. So in this case, in variable costing, no, we have to multiply this by the number of units produced. Okay, sir, why? Why do we need to multiply this by the number of units produced? Okay, remember, in variable costing, all fixed costs that are incurred will be expensed outright. Okay, actually, we have incurred, yan, so 2 times 10,000, that is 20,000. This 20,000 is your total fixed overhead cost, 20,000. Okay, so under variable costing, this entire 20,000 will be expensed outright. Okay, because this is treated as period cost. Okay, unlike in your absorption costing. Okay, so we'll discuss it later. But for the meantime, you just have to remember that in determining the fixed overhead cost, if the given is the rate, which is 2, you have to multiply it by the number of units produced, not sold. Okay? So 2 times 10,000, that is 20,000 pesos. And then again, deduct the 6,000 pesos. Okay, so that will give us, let's see, so 40,800 less 26,000. Sumobra. Yan. Okay, so we have 14,800. Yan. So as you can see, okay, aside from the format, no, or the manner the income is presented, the amount of income itself differs between the two costing methods. So, bakit kaya? Why do we have a difference in the reported income under these two methods? Okay, the difference again lies because of the difference in the number of units produced and the number of units sold. Okay, so yan yung difference. So again, going back, it is like this. Okay, so variable costing, that the actual factory overhead cost, or the fixed factory overhead cost rather. Fixed factory overhead cost is 20,000. Okay, so 20,000. Okay, under variable costing method, this 20,000 will be expensed outright. Okay, so ayan, expensed, meaning it will be presented in your income statement. Okay, so ayan, as expense, 20,000. However, under absorption costing income or absorption costing method, fixed overhead is treated as product cost. Okay, product cost. And then, if it is treated as product cost, it will only be expense, or it will only be presented in the income statement once the product has been sold. Okay, so this 20,000 fixed overhead cost will only be expensed, or will only be reported in the income statement once the products related to it are sold. Okay, so di ba we have produced 10,000 but we have only sold 8,000. Okay, so this 20,000 fixed overhead cost is related to 10,000 units. Okay, but we have only sold 8,000. That's why, okay, so the fixed overhead cost that will be reported in the income statement amounted to how much? So 20,000 times 8 over 10. Okay, so that gives us 16,000 pesos only. Okay, so ito yung part ng cost of goods sold. Yan, ba 6.5 included here is your fixed overhead cost by yung 2. So in this case, there is a difference, no, in terms of the fixed overhead cost recognized in the income statement. Okay, so expense under variable costing is 20, but under absorption costing is only 16,000. So the difference is 4,000 pesos. Okay, so this is the cost, no, of the difference between the two operating income and the operating income under these two methods.